No quantum computing company has ever completed a traditional IPO, but Quantinuum just filed an S-1 targeting a $15+ billion valuation backed by Nvidia. That's a new stock signal most investors are about to miss, and that gap is exactly where opportunity lives. Here's what makes this filing unusual. Every other major quantum computing company that's gone public to date, IonQ, Rigetti, D-Wave, chose the SPAC route. A SPAC, or Special Purpose Acquisition Company, is essentially a backdoor into the public market. Faster, less scrutiny, less disclosure. Quantinuum chose the traditional IPO, and that's not a small decision. This is a company that calls itself the world's most powerful quantum computer. It's backed by Honeywell, which owns 55% of the business. And Nvidia, the company that's become the defining infrastructure play of the AI era, has taken a position. But there are three questions we need to answer. Why does the IPO route matter? And what does it tell you about management's confidence? What does Nvidia actually see in quantum computing right now? And is $15 billion the right price? Or are we watching hype get assigned a number? Hey, welcome to New Stock Signals. I'm Max, the digital twin of Bill Smith, founder of Renaissance Capital, which for over 30 years has analyzed more than 11,000 IPOs. Bill personally researches and writes every video script himself. I hope you enjoy. He reads every comment, so be sure to share your thoughts below. Nothing in this video constitutes personalized investment advice. Always consult your own financial advisor before making investment decisions. Let's get into it. Here's the reality. Most investors will hear quantum computing and tune out. Too technical, too early, too speculative, and that instinct, while understandable, is exactly how generational opportunities get missed. I was at Renaissance Capital when Amazon filed its S-1 in 1997, an online bookstore, run out of a garage in Washington State. Wall Street laughed. I'm not saying Quantinuum is Amazon, I'm saying the pattern. The overlooked S-1, the institutional skepticism, the contrarian signal hiding in plain sight, that pattern repeats. This video is for people who want to understand what's actually in the filing, not just the headline number. People who want to know how quantum computing fits in the new stock asset class. And people who want a framework for evaluating whether this is a real signal or just noise. Let's build that framework together. To understand where Quantinuum fits, you need to understand what quantum computing actually is, and why it's different from anything in your current portfolio. Classical computers, the ones in your phone, your laptop, the cloud servers running Netflix, they process information in bits. A bit is either a 0 or a 1. Quantum computers use something called qubits. A qubit can be 0 and 1 at the same time. Think of it like this. A classical computer solves a maze by trying one path at a time. A quantum computer tries all paths simultaneously. That's not a marginal improvement. That's a different category of problem solving. Now, why has quantum computing been stuck in the lab for 30 years? Because building a stable qubit is extraordinarily hard. Quantum systems are fragile. The slightest interference, heat, vibration, electromagnetic noise destroys the calculation. This is where Quantinuum's technology matters. They use what's called trapped ion technology. Instead of building qubits on silicon chips, which is what most competitors are doing, they trap individual ions in an electromagnetic field. The result, a higher fidelity qubit, less error, more reliable calculations. Their system, called the H-series, has recorded the highest quantum volume scores in the industry. Quantum volume, a benchmark developed by IBM, and the one Quantinuum has tracked since 2020, measures overall system reliability, not just raw qubit count. More quantum volume means more reliable, more complex calculations. Here's the key insight. In quantum computing, reliability is the product, not speed. Not raw qubit count, reliability. Quantinuum has an argument backed by data that their system is the most reliable, commercially available quantum computer in the world. Here is the central claim of this video, and I want you to hold it clearly. The fact that Quantinuum is choosing a traditional IPO, while every competitor chose a SPAC, is the most important data point in this filing. Let me explain why. A SPAC merger bypasses the full SEC registration process, less public disclosure, less scrutiny of financials, faster capital raise. Companies that are genuinely confident in their fundamentals, their revenue, their roadmap, their business model, tend to choose the traditional IPO. Why? Because the traditional process forces you to open your books completely. Revenue figures, customer concentration, risk factors, cash burn rate. When a company files a traditional S1, they're inviting the full weight of institutional scrutiny. The quantum companies that went public via SPACs accessed markets when scrutiny was low and enthusiasm was high. They raised capital quickly, and trading turned volatile when investors got a better look at the fundamentals. Quantinuum watched all of that, and they chose the traditional route anyway. That's not arrogance, that's confidence, the kind that comes from having something real to show. Now let's look at what Nvidia saw. Nvidia doesn't invest in science experiments. They invest in infrastructure, in platforms, in companies that will become embedded in the architecture of how computing works. Think about what Nvidia's core business actually is. They build the chips that make AI training possible. But AI and classical computing have fundamental limits. Certain problems like drug discovery, financial modeling, logistics optimization, cryptography are computationally intractable at scale. Classical computers simply cannot solve them fast enough. Quantum computing solves that class of problem. But Nvidia's backing of Quantinuum isn't a bet on quantum computing science. It's a bet on quantum computing's market timing. It's a signal that they believe the commercial window is opening, and they want a position before the window is obvious to everyone. That is a signal I take seriously. Now here's what this actually means for how you think as an investor. First, understand what stage of the technology cycle you're evaluating. Quantum computing is still early commercial. It is not consumer technology, like running software on your desktop or downloading an app. The customers today are pharmaceutical companies, financial institutions, defense contractors, advanced materials researchers. That matters because it tells you how to evaluate revenue. You're not looking for the same metrics you'd apply to a SaaS company or a consumer platform. Here's what you're looking for. Are enterprise customers paying for access and renewing? Is the technology solving problems that classical computing genuinely cannot? Is the customer concentration manageable? Or is one contract the whole business? From the S1, Quantinuum has paying enterprise customers. The company generated about $31 million in revenue in 2025, a 34% increase year over year. They also have a cloud access product, and they have Honeywell, an established industrial giant, as both their majority shareholder and their anchor customer. That Honeywell relationship is a double-edged sword. It provides credibility and revenue stability, but it also means customer concentration risk is real. Serious investors will want to track how fast Quantinuum diversifies its revenue base after the IPO. Second, understand the valuation framework and don't apply the wrong one. At $15 billion, this is not a classical DCF exercise. You are not buying a company with 10 years of margin history. You are pricing a platform at the inflection point of commercial viability. The better analog is the early cloud platform era. Companies like Salesforce or ServiceNow at the time of their IPOs, before cloud became mainstream. The market said yes to owning the platform before the market understood the platform. Here's the question I always ask for technology IPOs at this stage. Does this company own a hard-to-replicate technical position? And is that position growing stronger not weaker over time? For Quantinuum, I would argue that the answer is yes. Trapped ion technology has a meaningful lead on superconducting qubit systems, which is what IBM and Google are building in terms of gate fidelity. Gate fidelity means how accurately the qubit executes an operation. That technical lead is not permanent. IBM has enormous resources. Google has demonstrated quantum supremacy. The competitive pressure is real. But right now, at IPO, Quantinuum has some of the best reliability scores in the industry. And in a market where enterprise customers are evaluating quantum systems for real workloads, reliability is what closes contracts. Third, and this is the most important practical implication, do not jump into this just because it's quantum computing. Base any decision you make on the filing. I've watched investors make this mistake time and time again, substituting a compelling technology narrative for analysis. Someone hears Nvidia-backed quantum computing and stops reading. Don't stop reading. Here's what to track in the S1, revenue run rate, and what percentage is recurring cloud access versus one-time services. Cash burn and runway. Quantum computing is capital intensive. How long before they need to raise again? Customer count and concentration. Is the revenue base diversifying? And roadmap milestones. Are they meeting the technical targets they've set publicly? These 4 data points will tell you more about this investment than any headline. Let me be clear about what I don't know and what I'm genuinely uncertain about. Is $15 billion the right valuation? I don't know. That depends heavily on how fast enterprise adoption accelerates. And enterprise adoption of quantum is notoriously hard to forecast. The technology is real. The use cases are real. The timing of commercial scale is not certain. Is trapped ion the winning architecture? I don't know. This is a genuine debate in the scientific community. Superconducting qubits, what IBM and Google are building, have their own advantages. Faster gate speeds, more established manufacturing processes. The history of technology tells us that the architecture wars rarely end neatly. The best technology doesn't always win. The best deployed technology wins. Could this be a SPAC-style story in traditional IPO clothing? Possibly. The discipline I bring to every S1 is the same: data over narrative. If the revenue is real, the customers are renewing, and the cash burn is manageable, then the story has substance behind it. If those metrics are weak, then the narrative doesn't save it. And finally, the timeline. Quantum computing is not a 2026 story. It may not be a 2027 story. The investors who do well here will need patience measured in years, not quarters. That's not a reason to avoid it. It's a reason to take the time to size it correctly. Here's what really matters. Quantinuum is not the most important story because of the quantum computing hype. It's important because of the discipline. A company with real technical differentiation, Honeywell-backed institutional credibility, an Nvidia vote of confidence, and the confidence or obligation to transparency that comes with filing a traditional S1. That combination is rare. Most investors will miss this filing entirely. They'll pick it up when the stock is already priced for everything we've discussed today, but we're looking at it now, before the noise arrives. That's the edge. That's the discipline. That's what 11,000 IPO filings teaches you. The S1 is public. Read it. Look at the revenue. Look at the customer concentration. Look at the cash runway. And then decide, not based on how excited you feel, but based on what the data says. If you want to go deeper, we've built the tools for exactly this kind of analysis. IPO Pro covers every S1 filing in real time. Link is below. If this video helped you think more clearly about a complex IPO, subscribe, like this video, and share it with one investor who would actually appreciate the analysis. I read every comment. Tell me what you want us to cover next. The new stock signal in the Quantinuum filing isn't the quantum computing. It's the discipline of choosing a traditional IPO when every competitor chose a different path.